Today, I will show you the steps in your Profit First journey after you have used the instant assessment to calculate your current allocation percentages and you know your target allocation percentages. If you haven't done that, please see my other blogs and videos and resources on how to get that done. My name is Jacob Curtis. I'm a CPA and certified Profit First professional. I co-own Utah Valley Quilting and founded Curtis Accounting Solutions, where we help quilt shops piece together financial freedom by implementing Profit First, taking on the bookkeeping, payroll, and taxes of quilt shops, and by providing proven business coaching and strategy. I'd love to hear your thoughts on how Profit First has helped you, so please leave a comment below and don't forget to like, subscribe, and share. Now that you've decided to use Profit First in your quilt shop, you need to tell your bookkeeper, and here's why. Because you need their support. If your bookkeeper is not on board, your implementation and use of Profit First will probably not be successful. You need to get your bookkeeper on board. Ask them to read the book cover to cover so that they can learn and understand the system and help support you. If they're unwilling to support you with Profit First 100%, you need to find a new bookkeeper. Like me, my team and I are certified Profit First professionals. The second step you need to do is to set up your checking accounts. You need at least 6 checking accounts at your primary bank and 2 other accounts at a separate bank. The 6 accounts should be nicknamed or labeled income, inventory, profit, owner's comp, tax, and operating or OPEX. Except for the income account, I recommend including your current and target allocation percentages in the account's nickname. For example, for profit account, if you had a current allocation of 1% and a target of 5%, then you would nickname it profit 1%, tap 5%. This will help you to know what percentage to use when allocating and doing your transfers. If you have a current allocation percentage of 0 in one or more of your accounts, like most of the quilt shops I work with when we start out, then use 1% as your current allocation percentage. Remember, your current allocation percentages cannot add up to more than 100%. I recommend labeling your operating account last, using the remaining allocation percentage in its nickname. A quick tip: use your existing checking account as your operating account. The 2 other accounts you will nickname Profit Hold and Tax Hold, because these accounts hold your money and the money they hold is withdrawn quarterly. You know your current allocation percentages or your caps, you know your target allocation percentages or your taps, and you have your accounts created and nicknamed. Now we are seeing and making some progress. But we need to start slow. We can't start instantly allocating based on your target percentages. Even if your business could do more than your current allocation percentages, we start small to help you get into that habit. Set your current allocation percentages low enough that it will not be detrimental to business and where there is no excuse to even try it. At least 1% in each account. Because if your quilt shop can't afford to set aside just a few percentage points of your revenue, it probably is not worth pursuing, or you need to make some major changes in the business. Now that your accounts are set up, it's time to make your initial allocation, your first one. When you look at your primary bank and your 6 accounts, the only account that has any money in it is your operating account, all right? Except for maybe some minimum balances in the others. So now we want to subtract any outstanding checks or payments that you have from that operating account and transfer the balance to the income accounts. Now we're going to do our first allocation. Divide up the money in the income account into the other accounts: inventory, profit, owner's comp, tax, and operating, based on the caps or the current allocations that you set. This is your first ever allocation and will be the only thing you ever do with the income account besides receive future deposits and sales. So I'll walk you through an example. Let's say you have the following current allocation percentages: 50% for inventory, 1% for profit, owner's comp, and tax accounts each, and the remaining 40% for operating. Now let's say you have $5,000 in your old primary bank account, which you've renamed and used as your operating account, and you have determined that you have about $3,000 in checks and payments waiting to clear. This means you have available $2,000, so you transfer that $2,000 to the income account. Then you transfer all the money from the income account, that $2,000, to the respective accounts based on those percentages. So that would be $1,000 to the inventory, $20 each to the profit, owner's comp, and tax accounts, and the remaining $940 to the operating accounts. As you see the numbers allocated, you'll see that while the percentages aren't pretty, it's pretty obvious that a huge percentage of your money is going to expenses. And it feels good to know that you have a system in clarity, but immediately that picture is pretty ugly. And this is kind of what we want, because over time, you're going to be motivated to improve those allocation percentages, right? You're going to be motivated to reduce your expenses. And perhaps even more importantly, you're going to find ways to increase your profitability through innovations, thinking up new and better and more efficient operations. Now, this system will help make it undeniably clear what money you have and what purpose it is being used for. And with this clarity, you can make much better decisions to improve the health of your quilt shop. Now that you've seen an example, do you have any deposits you need to make today? If so, tally up the deposits, deposit them into your income account, and immediately distribute the money to all the other accounts. You're going to do this going forward. But don't worry, we're going to get you into a rhythm shortly to make the process more manageable. Now, congratulations. I'm not saying this lightly. You've taken a huge step today. This is likely the first time in your entire business life that you have deliberately accounted for your profit first. Before anything else, you made sure you addressed your profit, your personal income, and your tax responsibility. That's a huge, big deal, okay? And it's a big step to a very, very healthy quilt shop. Now that you have your accounts established and made your first allocation, we need to get the money from somewhere to fund those accounts going forward. And there are only two ways that can happen: sales or expenses. Let's start with sales. We need to update your credit card processor like Rain Payments or WorldPay or Shopify or whatever software you use to deposit your customer payments into your income account. And whatever cash and checks you collect also need to be deposited into your income account. Now let's review your expenses. This is especially important if you are currently spending more than 100% of your sales. Sales growth can and does happen, but it takes time and it won't happen overnight. From all the quilt shops and businesses I have met with, it's pretty easy for us to find and cut between 5 and 10% of the expenses overnight, such as frivolous costs like unused recurring membership fees, office space that you're not using or needing, the expensive car that is a justified business expense, and perhaps even extra staff who aren't helping your cause much. Cutting unnecessary expenses might bring you some emotional and psychological pain today, but it's much easier than trying to make new sales out of nothing. You need to run your business on what you can afford today, not what you hope to be able to afford someday. This means that you may have to wait to hire someone or have to wait to make a big ticket purchase. When big expenses do show up, you sit down and ask yourself, do I really need this? If you determine it would hurt your profits today, which being interpreted is to say the longevity of your quilt shop, don't buy it. I have shared and will share more on cutting expenses in other videos, but cutting expenses is easier and quicker than conjuring up new sales out of nothing. You'll learn how to use only what you need and not be wasteful. You're going to pay fairly for what you use, but you're going to use less. And you're going to love it. It's going to be amazing. The next step is to get into a rhythm. I recommend that the day you process payroll is the day you do your allocations. First do payroll, then pay your bills, review any pending inventory orders, cancel old orders, place new orders. The key here is to do all of this on one day. Don't spread it over multiple days. The day you allocate money to your accounts is the day that you pay your employees and your bills and make new orders. Doing all this on the same day frees up your mind between allocation days to focus on other important tasks of the business. And finally, once a quarter, pay your profit distribution, your estimated taxes, and adjust your current allocation percentages. Using Profit First saved our quilt shop. If you stick to Profit First, it can help you too. Click the link in the description below to download the free step-by-step process for starting Profit First. On May 17th, I'll be hosting a live webinar on Profit First, and I'd love to see you there. So please click the link below to register. Thank you for watching, and make sure to follow me at Curtis Kelling Solutions on Facebook, Instagram, Pinterest, and YouTube. Again, click the link below to register for my next Profit First webinar. Thanks. Talk to you soon.